How's it going, you guys? I hope you guys are enjoying your weekend. Today is May 13th at 12:17 p.m. Eastern Time. Let's talk about the markets. Let's do it right now using SPY on the 180-day chart, which tracks the S&P 500 using the Thinkorswim platform. So here we are, here's SPY, and this is what I use for the general market movement. And you guys might have noticed I have removed a couple of resistances. Particularly, you guys have noticed that I've removed the long-term bearish pattern because we in fact did break over it, and as a matter of fact, we broke over it and we kept over it on Friday. So notice that on Thursday night on that video, we talked about the potential for it to retest the 270 to 271 area. Actually, on Friday, it didn't go all the way down to 271, and again, we did have slightly lower volume, showing that the participants in the markets weren't there, and we kind of expected that on a Friday, especially when we're near, when we're so high up, we wouldn't expect as much volume, at least not right now. So this tells a couple of stories right now. The first thing is I removed the resistance line because we crossed over it. Of course, there's a potential for it to come down, but should it start coming down, and I'm just giving you guys the scenario, if it does come down, I'm still looking for a more definitive test of 270 to 271. I'm not entirely convinced that this is breaking over. Of course this is breaking over, but I'm not entirely convinced that this is one and done. It certainly can keep going up, but I do see a more bullish pattern playing out once, or if or when it does retest the 270 to 271 area on SPY. Now remember, if it does go down and then it starts pulling back up, that is the time to buy, because once again, my sentiment for SPY in the markets is that we have it's almost like a signal of a reversal right now, despite the low volume. So here we have a new, the previous resistance, which was 271.30, which is now acting as a new support, and we'll see if it does come down to retest to see if this is a support in probably next week. So let's take a look at the 1-year chart. And you guys can see some better patterns. Once again, you guys can see that we've broken over, and it's just the way we went over. The way we went over is we gapped up. You guys can see that we gapped up pre-market, after-market, and that's actually a very good sign, because that's one way the market is telling us that it wants to move over that resistance. So this is a very promising trend, showing a bullish reversal. On the 3-year chart, we mentioned on Thursday night that we have a bear flag pattern, right? Coming down, kind of consolidates, coming back down, consolidates, and we were expecting another push down. I think, and it seems to me that the push down might have been around here. You guys can see. But we actually got pulled right back up after we pushed down. So that might have been the retest to see if we were going to form that bearish pattern again, only to get pulled up, and hence we have this major market surge. So is the bear flag pattern still intact? Almost not, right? Because we can still certainly do a bear flag pattern coming back down, but given the 1-year trend and the 180-day trend, and showing that we have broken over the resistance area, the markets certainly do point to a more positive sign. So I wouldn't mind if it does come down, that I would take a more bullish stance, tickers like TQQQ, which tracks the NASDAQ, right? So we've talked about TQQ and that its potential, because we broke over the resistance around 160, the potential is there to keep crossing higher as SPY does move higher. So we can still see it come down to the 20 EMA, and once it does start breaking higher, we can expect TQQQ to go to 175, 180, 190, as the bullish sentiment continues, at least. Looking at TVIX, which tracks volatility, is showing a completely different story, and this is exactly what we do expect, such that we had a previous resistance at 676. Look how much we broke lower, right? So once we broke this resistance, we've kept going down significantly. At which time, for those who are holding TVIX, I told you guys the best point would be to release your shares around 649 to 650 because that would be a breakup pattern. Now, yes, TVIX is oversold, but once again, that is tracking volatility. So where could it fall? Look at the low. You guys see the 1-year low at $4.66? So once volatility does fall that low, if it does fall that low this next week, that could be a potential buying opportunity for volatility. Now, of course, we're not going to buy into it if it's just like if it's continuing to go down like that, we're not going to buy into it, right? Because this is 466 and we know that volatility can go down as markets generally push up. So when are we going to buy into it? We're going to buy into it when it starts flatlining. When it becomes flat and the markets are reaching some resistance area. So we don't know where the resistance area is right now, right? In the long-term trend, I mean, we can say that the resistance is around 277, but this is something to monitor because TVIX and volatility will be a pretty good buy once we get that high in the markets. So yeah, so right now I think the bullish sentiment continues. Just follow the trend. If the markets are going up, you go along with the markets. That's just pretty much it. All right, let's take a look at commodities, which /CL, which tracks crude oil futures. So crude oil. Here's crude oil right here, right? We had a resistance, which was a support at 69.37. We had a resistance at 70.86, which is now functioning as a new support. So what am I looking for in crude oil? Look at this horizontal pattern, right? We broke over a small horizontal pattern. We broke over. We're making another horizontal pattern. We're looking for, once this candle has formed, we're looking for something like this. Obviously not as large as this candle, but I want it to be at least the same size so that the next 4 hours, so futures do open in around 6 hours, 5.5 hours. I want to see it push up and make a very nice green candle, at which point you can buy into which ticker. So tomorrow at market open, if it does start pushing higher, we can buy into the ticker GUSH, which follows /CL. We've talked about crude oil being bullish for the past month, and you guys can see that if it does push up back to 71.89, which it very well can because of crude oil and its bullish stance, right? Currently, it is 37.15. So let's look at crude oil on the 180-day chart. Here is GUSH. We talked about a support around 36.32. And you guys can see that we're coming back down to the support. Once we can validate that support, whether it's after market or before pre-market tomorrow, that is the potential where we can buy in to see another surge up back to around $39. So again, your margin for profit, let's say $36.18 to $39. Let's not say $36.18. Well, yeah, if you guys buy in around $36.18 or $36.27, margin for profit is $6, and if you just set your margin of loss around 6%, margin of loss around 3%, I think that certainly would be reasonable. But again, wait for it to push higher before investing in GUSH, right? Because we want to validate this as the new support. The reason why I like GUSH so much is because we've talked about GUSH on the 3-year trend, showing that we've been making a lower high, except now. Now we have been making higher highs. This trend line has been completely broken. This resistance line has been broken. We've validated this resistance line as the new support. As you can see by this candle, this shows a bullish stance for GUSH. So once again, I'm pretty confident that GUSH will continue to trend up, especially if we get into a good buying point. So let's keep at it. That's crude oil for you on the 180 and 3-year charts. And speaking of what, let me just remove these lines. Much more beautiful. Okay. Looking at DRIP, which is the inverse of crude oil, we looked at DRIP on the 1-year chart particularly because we said that the boxes represented the breakdown areas of major supports. Every time it broke a major support, it would keep going down 18 to 20+%. Here we go. Break a major support, kept going down. break of a major support, it kept going down. Here we broke a major support on drip, and look, we kept going down. So we actually hit $6.78, and this was actually on Wednesday. We hit the 3-year low. So for those who are trying to go into drip, again, I want to question, do you want to invest in something that is continuously falling in the 3-year low area? Even if it does trend, let's just theoretically say it trends up like this. Everyone's going to be so excited, right? What happens if it goes right here? Let's say tomorrow. I don't think it's going to happen like that, but let's say tomorrow drip goes to around $8.27 and it closes there. People are going to be talking about, oh, here we go, the drip reversal. Let's all go long on drip. So I think people do forget quite easily. Look at this, right? It went up this much, 13%, and then boom, and plummeted back to its previous low, right? Again, if it does start going up, that only means that we have a potential good buying opportunity for GUSH, but not into drip, especially as drip is trending downwards. So looking at /GC, which tracks gold futures, gold futures are pointing to something pretty interesting on the 180-day chart. I want to show you guys this trend. We talked about gold having a support around 1312. Remember, guys, here's the support. We validated the support several times. As you can see that we validated support maybe like 5 or 6 times right here. What are we at right now? We're back down around here, showing that JNUG, which follows gold, could be another great buying opportunity. Gold is at the support. It's trending up. It's at the 20 EMA. This is actually a very nice buying opportunity because should gold continue to fall below its support, let's say it goes below its support, then you can say, oh, well, I was wrong. It kept going down. But chances are right now that gold will continue to trend up. You guys can see this, right? Kind of comes down, goes up, down, up, right? And it's now coming down again. There's a good chance that it will keep going higher for gold because we were at the support and we did see a nice reversal. So JNUG, and we've held this stance for the past week that gold has been bullish. I think we held it since over here, right? Gold is back down as 20 EMA. So obviously on JNUG, it does look like we're a little bit overextended. You guys might be like, well, Kevin, look at this, right? Isn't this not good? Aren't we on the higher end? I do agree that we are on the higher end, but recall last video, we said that gold has the potential to break 1630. And the reason why gold has the potential is because if you look at /GC, which is what I just showed you, look how much room /GC has to make up. That's a lot of percentage points on the futures. And then on JNUG, right, if gold were to just continue pulling higher, we could see this pulling even higher than this, right? We can see it pulling to probably like $18, $17, so $16. So that's why I feel like JNUG still could be a good play right now, even though gold has kind of went down 2% today, not too much. So, all right, /natural gas. Here we go. Here's natural gas. I think natural gas has been holding this pretty nice predictable pattern. You guys can see that it's been having a resistance around 2.805. It's had an ascending support. So look at that, right? Basically, UGAZ, which follows natural gas, UGAZ, made up all of its ground in 4 hours from the support to the resistance. Now it's pulling higher, similar to what it was doing here. So are we going to go into UGAZ? Not right now, but we are looking for a U-turn on natural gas and getting into DGAZ now. DGAZ is the inverse of natural gas. I want to show you guys DGAZ on the 180-day chart. We're starting to flatline. Let's not get in right now, especially as natural gas is still pulling up, but we're looking for a nice entry point. So if it does start coming right here and starts reversing tomorrow, or if it does like so let's extend this support line to the right. If it starts going down and it starts pulling right back up, similar to this, this is a good area to buy. So if you say, I want to buy at 25.43, should it dip that low tomorrow, I think that's a very good chance because you're limiting your losses, but your potential for gain is, well, you guys can see this pattern, right? Kind of like this pattern right here. Your potential for gain, if you get, again, is still pretty high. Let's just conservatively say that it's 8%. But your stop loss would be like 2% or something like that. So I think DGAZ is a potential play coming up. So this is definitely something to look out for on Monday and Tuesday. So if Monday it doesn't do much, if it just does some horizontal action, we'll look for Tuesday. But I do like this sort of trend. All right, you guys called out a lot of tickers. I'm going to try to tackle all of them. Once again, thank you everyone for all those ticker submissions. It has been wonderful, all right? We've had a great time looking at everyone's tickers. The first one we're looking at is AMAT, Applied Materials. So let's see. Okay, so this trend is actually not too bad. The only thing is it's making lower lows right here, right? But it has been breaking its previous, see, you guys can see that it broke its previous resistance. So the one thing I would look out for is, take a look at this, right? Earnings are coming up, and I don't know what earnings will do, because on the 1 year chart, it has broken over the resistance, but because earnings is coming up, it might pull it down. It might pull it higher, and this is just not a chance that I would like to take. You guys can see that it was in a descending pattern until it broke over, but again, like, you guys can see how much earnings can affect this stock, right? Look at that. What is that, right? That is like a lot of confusion right here. This is a lot of confusion. We pulled higher, and then we had a massive sell-off back down. So what am I saying? I'm just saying let's wait until earnings come out before, you know, buying into and potentially looking. Let's revisit this stock later. Consolidated Edison is the next one that was called out. Okay. So it looks like it's been coming down. It's found a new support around here. So looking at the 1 year chart, this doesn't look very nice. This was pretty nice, but look at the massive sell-off, right? Look at this. Down, up, down. It's almost like a bear flag pattern. Let me take a look at the 3 year. You guys see that? There's a good chance that it will keep going down. So this is not something that I like, especially given that it came down this much this quickly. You guys can see that if you guys started investing in each of these weeks, any of these weeks, and you guys were, you guys kept holding it, and if you just kept holding it, you guys would have lost pretty much. You guys can see that, right? I'm going to show you give you guys a box. If you guys invested any time around here, you would have been even or lost money. How many weeks was that? Basically 1, 2, 3, 4, 5, 6.5 weeks. 6.5 weeks you bought in, and now you're losing money. Is this a stock that you would go into? Not right now. This pattern's actually not really good at all. Like, even if it goes up, like, oof. BGNE. Oh, what the heck? So here's BGNE. Here it is on the 3 year chart, and you guys can see that this is showing a very interesting pattern. I want to show you guys what happened here. Right, a green candle met a red candle met by a green candle, and then we surge back up. What are we having here? Generally, we might be starting a reversal here. Look, we're at the 3 year high we hit this week. So we're looking for another green candle to go up, but look at how overextended over the 20 EMA, which is the blue line we're at. Look how great if you guys were buying near the 20 EMA, but if we're so overextended, let's just say it comes down to the 20 EMA, and you guys bought in because you're like, oh my gosh, we're making 3 year highs, we should go into this one, right? So you would have lost maybe 13%, at which time maybe you would have been discouraged and you're like, oh, I can't take any more losses. I put $10,000 in there. I lost $1,300. I can't do it. But then it starts trending up. So ask yourself, where's the most comfortable position in which you can take a position? Well, the most comfortable position is actually at the 20 EMA. It's really overextended right now. I really don't want to go into this one as it swings, if or when it swings downwards. If it does swing higher, sure, but you know, that's not going to last forever, right? So this is one that's wait and see, but let me put an alert once it does start trending under 157. Put an alert, and we can revisit that one once it does do that. So good call out. I like it. Next one is Hubs. Okay, so Hubs is pointing out to another good pattern. I like this pattern on the 3-year chart. You guys can see that we've hit the 20 EMA. We've done a reversal back up. This is a very nice trend. So this could be a good buying point right now at 114.65. But let's see if it'll get a little lower, maybe around 108, at which time this would be a good time to buy in again. You guys can see that every time it hits the 20 EMA again, it's acted as a good support. You guys can see that? See that right here? So because we've hit it twice already, I actually don't really expect it to hit it again. I mean, it may, but I'm still expecting. So I wanted to get into a better position than 114, maybe even 110. I would like it even more. So once it starts, if it does start trading a little lower, you could go into a position and then ride it higher. So where are we gonna sell? Well, we're gonna sell around right here, right? Around 119, 118, around there, because that was the previous high. So your potential for profit, should you get in around 106.80, let's say, still pretty good, around 10%. That's not bad. So I like this trend. Good call out. Oh, and you guys see how when we're so overextended, look what happened. We had to retrace back, right? So that's the same one for the or the one that was going high. Was it BGNE? Right? Because we're so overextended, we're still waiting for it to retrace back and retest that support, which we do based off of past trends, think that is the support. Okay, SHAK. I think you guys said that I didn't point this one out. I don't know. I drew this higher low pattern, so it seems like I did look at it in the past. But okay, we'll take a look at it again. So SHAK. Oh yeah. Okay, so I think we visited this like it was before earnings. So before earnings came out, I told you guys to not take a position on this one. So earnings came out, and it seems like it went up 30-something%. Oh, yeah, it went up 30-something%. So, right. Look, okay, so look at this massive downtrend, and now we're trending higher because of earnings, right? How far up do you think this stock will go? Do you think it's going to go like that? Raise your hand if you think it's going to go like that. I can't see you guys. Okay. How about like this? All right. How about like this? Raising your hand. No one? Anyone? Some people? How about like that? Okay, so let me just point out okay, now rank these 4 lines based off of which one you think is most likely going to occur in the near future. It doesn't have to do directly like that. So rank those 4 lines. Okay, so I'm going to tell you my rankings. My first ranking would be this. Okay, here's the first one. Second one would be actually something like this. And then this was almost out. This is not it. And this would, I don't see this happening. I mean, it might keep going up, but so this is number 1. This is number 2. So it might still do something like this and then come down. I wouldn't be surprised, right? But look how overextended over the 20 EMA we are. Yes, we had to jump up. Look, we came back down under the 20 EMA. We revalidated the 20 EMA here, and then we went up. We're so overextended, I can almost argue that once we see a reversal pattern on this one, we can start short selling SHAK. So yeah. Interesting call out. I think this is one to look out for to short sell. Tip. All right. Shop. Is this Shopify? Yeah, Shopify. I've heard about Shopify. I think people were talking about it like during this time. They were like, "Oh, is it gonna like keep going down. What's going on? So Shopify has a very nice support right here around 117.23, right? We don't have to be a very nice, very smart person to know that, oh, every time it's hit this area, it's a support. But we're at almost the resistance area. I do see it might go up a little more, maybe even to 154, 150 area. But this is another one where I'm looking for a U-turn and a sell-off to come back down. Looks like earnings, what did earnings do? It brought it down and then we had just push back up. Yeah, so this is one actually to watch to short sell as well. You guys can see that it's been pointing up, but at some point it might go down. And because we're so far up, you guys can see that if you guys buy in right now, just ask yourself this question. If I have my arrow right here, look at this. You buy in right now, what's the chance that it'll keep going up? Look at the number of candles that are above versus the number of candles below where you're buying. The greatest chance is that this will go down soon. So let's not buy into this one. All right, IQ, let's look at the one. So it looks like IQ is a new stock because I don't even have too much data for this one. Okay, so IQ, because we don't have enough data, it looks like this stock just got public around this company 3/29 March, end of March. I wouldn't take a bet because you guys can imagine as the stock gets released, there's a lot of fluctuations. There might be buyers and a lot of sellers. It's just very predictable pattern. And we play by technical analysis. If we don't have enough information on technical analysis, then we wouldn't take a bet. For example, how would you know that this was the low? Well, you wouldn't have. You would have thought this was the low, especially when you started. How would you have thought that this was the high when it first got released? Well, you wouldn't have. How did you know this was a high? You wouldn't have known as well. And how do you know where the next low is? I mean, you can certainly draw something like, oh, this higher low pattern. But as stocks are released early on, these patterns might not obey very nicely, right? So let's not take a chance on IQ. And with that, I want to thank everyone for your time, for visiting this channel, liking, subscribing if you do find this content helpful. Of course, if you guys subscribe to this channel, you guys get notifications on when I post these videos, Stock Talks, every day. So this is Sunday nights, Monday nights, Tuesday, Wednesday, Thursday nights. And I also do content videos to help with your trading strategies, whether you're a beginner, intermediate, or more advanced traders. I'm just trying to help everyone, and I think everyone's helping each other. We're building a very nice, positive community. Let's keep that up. And I will see you guys tomorrow. So note, tomorrow the video will come out really late. It's gonna be like a late night video because I'm gonna be back at like 10 p.m., 9 p.m. So it's gonna be really late. And I'll do a video and I'll post it, I think. But look for that tomorrow late night if you're still up. If you're a late night person. So I hope you guys are doing great, enjoying the weekend. Happy trading tomorrow. And let's continue our great trading habits, being disciplined, finding good entry and exit points. So, see you guys tomorrow.